today. But of course, a key factor being that we need to start focusing on the credit lines that government, of course, has started to embark on, and how that perhaps is crowding out the private sector.
Yes. For me, there are three key things I take away from the meeting, apart from the tightening, which was signaled through the narrowing of the asymmetric corridor. I think there was the talk of credit expansion, and clearly credit has been going to the government, and there are fears of crowding out the private sector. The second thing is about the exchange rate. The government seems to be comfortable about the exchange rate and the stabilities as shown in recent times. But he clearly gave the allusion that it's not just the responsibility of the CBN to keep the exchange rate stable. The government also has to implement structural reforms which will reduce the import dependability of a country. And thirdly, inflation, which I think is the major concern here. He cited upside risks to inflation due to the risk that food prices might go up, increased AMCOM spending and political spending. And I think those were the key things that I took out from that meeting.
Seun, well, interesting to note, I mean, looking at the NSE All Share, a fantastic day. We're up just over 3%. What actually drove trade in today's session was the anticipation of this decision and perhaps some of the commentary that came out today.
Really, the activity was in the banking sector. We have seen the banks attract most of the activity. Before today, there was a pullback generally in the banks, led by the rescued banks, which had gained significantly on the news of M&A activity and AMCON coming in to take up bad loans. So it was relatively a good day for the banks, and that's what supported the index.
Seun, it's quite interesting to note that when we look at the bank's contribution to GDP, it's not that big. Of course, there are other bigger contributions to the growth scenario that is playing out in Nigeria. Why do you think there is going to be such a massive focus on the banking sector in Nigeria? And do you think that this is going to be one of those trends that will continue down the line?
Clearly, if you look at the economy, banks are intermediaries. So while in themselves they might not constitute a huge part of the GDP, their multiplier effect actually has a huge impact, and it has an effect on the economy that is not just reflected in their market capitalization or in earnings or anything you want to focus on in that respect. And so when you look at that, the banks, of course, have to be the key focus when you're looking at the economy. You have to talk about credit expansion and other roles of banks. But when you come back to the NSE, the banks still constitute the bulk of the index, over 28% assets today. And so even with the Dangote Cement listing, which has reduced their dominance, the banks clearly continue to dominate. Also, news that has come out recently has been favored of the banks. You talk about AMCON, M&A news, and basically that has, of course, continue to generate interest in the banks.
Seun, also just listening to the governor, of course, imports being one of those big issues that are contributing to the higher inflation figure. And one thing that you can use to mitigate the inflation number is, of course, a stronger exchange rate. What do you think the central bank governor's stance on that will be going forward? Do you think that perhaps a stronger naira down the line could dampen the inflation figure?
Clearly, we want a stronger naira, but you have to look at it in the broader context of things. Nigeria is still very import dependent, and so till there are structural reforms that will make us a more productive economy, you're going to continue to see some pressure on that front. That said, the CBN has done a good job so far in maintaining stability and in deflecting speculative activity. I would expect their role to continue in this regard. Concerning an appreciation of the naira in the near term, I don't really see that. But in terms of stability, yes, I can think that we can expect that in the next few months.
Let's touch on the consumer-related stocks, and we have seen some fantastic numbers. Let's take 7up, for example. It's 21% increase in pre-tax profit, turnover 28% higher. Are you optimistic about consumer-related stocks at this point in time, with a much higher inflation rate and, of course, less credit being extended perhaps to the consumer? Where does that leave these consumer-related companies?
Yes, across the consumer space, I'll be neutral at this point, but selective with my picks. I like 7-Up at this point. As you said, numbers were strong, 28% growth in turnover. Although bottom line was less less strong, the numbers were positive. If you look at that market, there has been a lot of investment by 7-Up in building brand portfolio, in expansion of its plants. And we've seen these numbers starting to kick in. If you compare them to their nearest peer, NBC, numbers have been clearly better, margins have been better. And so I expect 7-Up to continue to do well. And just relating it to the broader consumer space, my picks will be companies which have been investing in their brand portfolio, which have the ability to deliver products and to meet consumer needs. Those will be my picks. Now, in that regard, we like 7-Up at this point, and then also we like flour mills too.
Let's touch on another topic now. Nigeria's Dangote Cement issuing a global depository receipt to be listed on the London Stock Exchange next year. What do you think the significance of this will be in terms of perhaps other companies embarking on the same strategy?
This is the third time we'll be seeing a GDR listing. If you recall, the first one was by GT Bank in 2007, and Diamond Bank also embarked on that process. And so this is not new to the Nigerian industry. Of course, going forward, we expect other companies to go along that route. Clearly, international diversification of your shares has benefits in terms of raising capital offshore, and in terms of the visibility it gives you to the international market. And so it's a positive for the market. It's something that was always expected from a big counter like Dangote. And I think yes, it's a good signal for the market at this point.